Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our Head of Research, Jasper Lawler, to discuss the ongoing rally in the dollar, the US withdrawal from the Iran nuclear deal, corporate earnings and a jump in M&A activity. Before that though, I'll run down some of the top corporate results to watch out for this week. On Monday, John Lewis reports full-year earnings. On Tuesday, Smurfit Kappa, Commerzbank and Home Depot report first-quarter earnings, while EasyJet gives half-year updates and House of Fraser, Land Securities and Vodafone announce full-year results. On Wednesday, it's Burberry's turn to announce full-year results and Macy's and Cisco report first-quarter earnings. On Thursday, it's a busy one with Experian, 3i, National Grid, Royal Mail, Thomas Cook, British Land and Mothercare all reporting full-year results, while Walmart and Vivendi update on first-quarter earnings. Finally, on Friday, AstraZeneca, Campbell Soup and Deere & Co report first-quarter earnings. So now, moving on to the economic calendar. Market-moving results start on Tuesday with China retail sales and industrial production, German GDP, UK unemployment and average earnings, then Eurozone GDP and US retail sales. On Wednesday, it's German and Eurozone CPI, followed by US industrial production. On Thursday, it's Australian unemployment. Then on Friday, we round off the week with retail sales and CPI, both from Canada. So Jasper, this dollar rally, as the Americans would say, it keeps on trucking.
It does keep on trucking. It's it was really fast takeoff, but it's just been steadily grinding higher over the last couple of weeks. And there was a little bit of evidence that maybe it's coming to at least a brief pause period towards the end of the week because we had that softer than expected US inflation. Yeah. But, when you compare the US with all the other countries around the world, obviously we had the Bank of England last week. They paused rates while not too recently they were looking to hike rates. So still these other central banks not quite catching up, even if the US itself is moderating its plans, or at least inflation's moderating a bit. So there isn't really any particular reason to think that this dollar rally's done, other than the fact that the price has just been sliding for a few weeks now and it's just due some sort of pullback. Yeah, and Trump went for it in the end. US is out of the nuclear deal. So how do you expect things to pan out from here? Yeah, I mean, that helped the dollar a bit, I would say, because, the dollar has been a bit of a haven in times of uncertainty recently. So that added a bit of uncertainty to things. I'm still of the opinion that probably, even though Trump is basically saying that all the sanctions are back on to Iran, there's going to be a certain sort of implementation period for that. And during that implementation period, there's still a chance that, just like with all these other deals, NAFTA and all the rest of it, that maybe Trump comes back in and does some sort of deal. So that at least the hope of that happening, I think, can actually stave off any uncertainty in the market. And probably we've seen some of the most explosive gains in oil. And now we're back to the point where we have to look at what OPEC are doing next and the kind of usual, US production numbers, etc., that would otherwise drive the oil price. Yeah, and we've got a lot of updates from UK companies coming this week, and US earnings drawing to a close as well. So what's happening with earnings? I think it could be a big week for the FTSE. Obviously, a couple of standouts being Royal Mail, Vodafone would be definitely two to look out for. And the whole UK companies, generally those international firms, they've been benefiting from stronger global growth, the weaker pound. It's all been pretty good. It's really just been the more domestically, particularly the retail-focused companies that have not been faring as well. Luckily, from a FTSE 100 perspective, they don't actually make up such a large proportion of the index. Yeah. On the US side, it's been an absolute blowout earnings season. It's been impressive. It's exceeded what were even quite high expectations. But the strange thing about it is that stocks have not really reacted. They've not fallen off a cliff, but they've not rallied significantly. So maybe that's just a matter of kind of digesting all the uncertainties, getting the earnings season in the rearview mirror, then you make a decision. If that's the case, there's still chance for the recovery from that correction to continue. But I would say it increases the risk that actually if this earnings season wasn't enough to push equities higher, then what is? So, then maybe the other alternative is to turn down. Yeah, of course.
And sticking with companies, M&A activity has been quite a big deal this year so far, and it's picked up. Is it possible to draw any conclusions from that?
Well, it's one of two really. One is that confidence has got to be high for you to take on that amount of debt, and you feel confident that investors are going to receive it well. So the companies themselves must be feeling confident generally about the outlook. But the flip side to that is that, well, they probably could also invest the money into expanding their business organically, and maybe they don't feel that the general scenario out there is good enough for them to do that. But you can understand, given the choice for these managers, you know there are certain risks to these M&A deals, and obviously sometimes they really don't work out. But if you can pull it off, it's a very quick way to extra revenues at still very low interest rates. So it makes sense to me. We're a year into Trump's presidency. Seems like Brexit jitters have calmed down a little bit. Obviously, there's still problems there, but putting all that aside, maybe investors are actually, the companies themselves are coming back in and believing again that these deals can actually make a big difference and do well.
Yeah, great. Ending on a positive note. Thank you, Jasper. And thank you all for watching. If you wish to find these videos online as they're released, please follow LCG on social media.